You're listening to AI Prism from Seoul Economic Daily.
It's Thursday, August 27th. Here's why global investors are paying attention to Korea today. 57% of economists now expect the Bank of Japan to hike rates in September, up from just 5% a month ago. The ECB is reportedly preparing its own quarter-point move next month. Korean issuers are still selling dollar and won-linked bonds despite near 5.2% US 30-year yields, and Chinese buyers are absorbing most of it. A voting rights fight at Korea Zinc could scramble one of Korea's highest-profile shareholder votes next month. Global tightening expectations are resetting fast. A Reuters survey shows the share of economists expecting a BOJ September hike jumped from 5% to 57% in a single month. At the same time, Korean issuers from state agencies to brokerages are pushing ahead with foreign currency bond sales during what is normally a slow August window. Both moves are unfolding as a governance dispute over Korea Zinc heads toward a shareholder vote in September. Here's what the numbers show. Korea Eximbank raised 625 million New Zealand dollars, about 515.6 billion won, marking its first New Zealand issuance in 9 years. KB Securities secured $300 million from Asian and European institutions, its first such deal since 2019, while the Korea SME and Startup Agency priced $400 million at the tightest spread among comparable state issuers. The US Treasury has resumed long bond buybacks to calm yields, but the 30-year Treasury yield still sits near 5.2%, keeping dollar funding costs elevated for Korean borrowers. Chinese institutional investors have accounted for 70 to 80% of order books on recent Korean dollar bond sales. 57% of economists surveyed by Reuters between August 17th and 24th expect a BOJ rate hike in September, versus 5% who expected a third-quarter hike a month earlier. ECB policymakers are reportedly preparing a 0.25 percentage point hike for September, and Executive Board member Isabel Schnabel said current policy rates are unlikely to bring inflation back to target without further tightening. Yongpung and MBK partners petitioned Seoul Central District Court on August 21st to block Korea Zinc chairman Choi Yun-bum from voting roughly 5% of shares tied to a 541.1 billion won loan. Korea's listed companies paid out 43.2 trillion won in dividends in the first half, already 85% of all of last year's total payouts. So what does this mean for global investors weighing exposure to Korea? Earlier, we said Chinese buyers are absorbing 70 to 80% of Korean dollar bond order books. Here's what that actually means for you. That flow is currently substituting for the usual August liquidity gap, so any pullback from Chinese accounts would show up quickly in Korean funding spreads. Layer in a faster BOJ and ECB tightening path and a governance fight at Korea Zinc, and Korea's near-term risk premium is being shaped as much by external rate moves and single-name disputes as by domestic fundamentals. That's today's AI Prism, Global Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Ifrah award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.